Okay, what is the definition of trading? I'll show you the definition of the trading. Trading means it is the exchange between buyers and sellers. So when there are sellers, what do you mean? Sellers are selling something. Let us say they may sell vegetables, they may sell watches, they may sell electronics, they may sell anything. So when sellers are selling, what happens? Buyers will flock around sellers to buy those items. So that's exactly is what trading means. In other words, trading means when selling occurs, which means when sellers are there, buyers will come around sellers to buy this what sellers are selling. In the same way, when buyers are here, sellers will come to buy them. But the problem is now these buyers are buying, okay, and sellers have to come and sell, okay, sellers have to come and sell. So now here we have got up to here sellers have come, but whereas when we take this example, like here is a recent trade, here this area there are no buyers but there are sellers, okay, there are no buyers, so no buyers. So trading means compulsorily at one point buyers will come here. The only thing is we don't know when buyers will come and buy. It's like in a shop, in a single day nobody comes and buy what you are selling. If you are selling electronics, your watch maybe it may get sold after 1 year, after 6 months, after 3 months, we don't know, or within 2 days, we don't know. So trading is exactly such. Now why still, yeah, you know somebody will buy this area what I've just drawn, but still why traders lose? Because traders don't know when will price come back to fill the requirement of sellers for buyers to buy what they are selling. So under this condition, the only thing trading requires is, this is the definition of trading. Trading is nothing but exchanging in a particular period of time, but we don't know the period. That is why many traders take losses. So lack of patience to hold the trade, or over leveraging, and most importantly margin calls. Your position gets liquidated before the price comes here. So you have to give, when you buy and sell something, you have to take position in such a way, your position must not be liquidated even if the asset falls 80%, which is unusual, but that is a kind of like, what is this? Your position must not be liquidated even if the asset falls 80%, which is unusual. So your position must stay active even if the asset falls to 80% drawdown. So which means your position size must be 0.5% of your total capital, probably, okay, even 0.1 or 2, okay. Or if you are trading options, you must take at least 1 month option ahead. If you are trading in June, you have to take July options. So that is how you have to understand trading. Now I will go back and show you if such occurrences are there. Okay, this is BTC USD. Let us see such occurrences where steep buying and selling took place. Okay, so now you can see here. I don't know, this one is 2nd July, so is very latest one, because we need to give enough time so that's it to come back and okay, do the business. Now I love this steep buying. You see, this is steep buying. Okay, so these are the kinds of opportunities. Like here we have steep buying. Okay, here okay, let us take this area. Okay, we don't have it is a direct buying is there, but this is a great opportunity. You can see here this area, horizontal line, this area is the horizontal line, just mark it. So if you see here, there is no buyers are there here. Okay, buyers are here, but there are no sellers. Now this is the area you have to understand. Now what happens here, when price is almost ending somewhere here, so you want to, your target is here, entry is here probably. Okay, now you can see this is the entry, this is the exit. So by the time you saw this somewhere around here, you are saying little bit pullbacks are coming, so you may think the price may come down here. The moment VIX, like even you can enter here also, because it is almost touching here this line. Okay, almost touching here, or if it is already touching, then you may take somewhere here. So here entry, somewhere here. Okay, so did touch here. So or you can also, when it forms a red, you can also take entry here. Okay, but I prefer take entry here because it is breaking this area, this, or this is more powerful. This is breaking this double top and it is breaking here. So my entry here, my actual entry here, but lagged entry, relaxed entry is here. Okay, real entry, just this is extra profit for you, but you can also enter here. But what I am trying is, if it is breaking this level, and once buyers are ready, okay, to once buyers are there, okay, somebody should sell them. So I'll be waiting for sellers to break this buyers area. So here exactly they have broken, retested. Okay, then this is my real entry. You can also enter here, I have no problem. Okay, when this is not formed, or your emotions tell you enter because of these reds, you are entering anywhere here, your wish. As long as you have this opportunity, you don't need to worry. As long as if you maintain right position size without even going up, even if it price moves up to 65, you should not be liquidated. So your position size and your capital must be, again, that's a secret in trading. Okay, so we don't know when it comes back. Your entries can be anywhere here. Okay, it can be here, it can be here, it can be here. So even if you want to go a little bit up here, okay, let us see what happens. Even I did not see, just I randomly took this chart just to explain you. Buyers are here, but there are no sellers to sell them. They want to buy something, that's why they are there. Now see, let us come. So it is falling here, this is my entry, but it went. So no keeping stop loss here. Okay, very important rule, no stop loss. Okay, so up to maybe 80% drawdown, which is unusual. Okay, so now here you can see it's coming. Now you see the magic, it went up. Okay, so you are expecting this to come here, sellers should come here, but buyers are further moving. Okay, one thing, never average down, because you will be liquidated if price moves further. Okay, so never average down. So control your emotions. It went off. Okay, so you have one more entry here, from here to, okay, here you got one more entry here. So I'm taking one more. Instead of averaging down, you can take one more entry here. Okay, this is not averaging, but you are taking this. Some more buyers are there. So we have two sets of buyers. So one buyer, I am removing this entry point. So one is this area, I am marking it into red. Okay, so this zone I am marking into red, this area. Okay, and again I have got here one more here. Let us say this one, this area. Let me make it red. So we have two areas entry. Okay, I think here what you enter here, don't exit here, because you have the price must come up to here. So one entry here, second entry is here, but exit is only one. Okay, in one place here exit. Okay, nothing more than that when it touches this line. Okay, now let us see the magic here. I don't know what is the chart. Really, I have not seen this chart in real time. Now you can see here. Yes, entry is here already. Okay, you must have entered, as I've said, when it breaks somewhere. Like here it is breaking. You can enter here, or if you want, you can also enter here. You can also take the liberty of entering anywhere. Yeah, here probably good break. Here you are real. This is just relaxed entry, but our entry is real here. This is extra profit. So you can see it came here. Now remember, it doesn't come, it will play the game, mind game. Your emotions will be disturbed here. So it has come up to here, again it will enter. Sometimes even it goes up, again it will come down. See the spike here, it went all the way here, and you will be exited thinking that price will never reach this line. But unfortunately this is pulled because buyers are down there. So buyers are there, sellers should go there and sell them something to buyers. So see there how the fraud. It came here, one target is reached, this entry, this target is reached. I am cancelling this target. The entry is there, and our exit is this entry also remove. Our exit is this final exit. Okay, I can see here it went up, finally it came down here. See let's see. Did it touch our line? Oh my goodness, see, everything has been touched, more than what we expected. So seller should come. The only the thing is, we took two entries because we got two buying setups here where sellers are not existing, and finally it came out. So what you understood by trading is the exchange between buyers and sellers. No buyer will go just by buying without selling that. No seller will go by just selling without somebody to buy what they sell. That is what trading. Otherwise markets will halt completely. Stocks will stay where they are. The prices won't move at all. So this has to happen. So if you understand what I am trying, what is the biggest rule here is, your position must not be liquidated even if the asset falls 80% down. So you must remain in the position, never average down. But if you have good capital, you can take multiple entries, but that doesn't mean averaging down, because if there are buyers, you can buy. That's what. Okay, nothing more than that. Okay, so finally here we have some sellers. here this area, so it will somewhere at some point must be there. See here, it came here. That's what. Okay, see here, it came more than what we expected, so that's as good as we think. Okay, so with this I'm concluding this trading video.